investment firm called Wedbush. Daniel Ives is the analyst that is a frequent Tesla reviewer and also a frequent Tesla bull. Daniel indicated that for the near term, i.e., the next year and the time before that, he sees a difficult road for Tesla, but that as we get beyond that period, we start seeing a lot of positives for the company. So, and he's coming up with a target in the range of $315 a share, which I think is pretty bullish given that it's at 191 now. We also plan on reviewing just a sine curve discussion that we've had every quarter for the past year as a way to sort of get a handle on what's going on with Tesla. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to encourage you to join us on Patreon for better ideas on investing and trading and many other stocks, but especially what's happening with Tesla and the EV market. So I've been very slow to do shows over the last sort of, let's say, a week and a half since we got numbers on Tesla. We did do one show already, and you'll start seeing more shows from us as we get sort of out of the fog of what's going to happen. As you noticed, we started warning you about when Tesla was at 250, we encouraged you to put some hedge in, 5 to 10% of your portfolio. And now that we're in the 190s, we've sort of retraced what we got to at the high point for the quarter. So if you're still hedging, it's never bad to have hedge in, but I would reduce the percentage of hedge and probably look at this point to start accumulating. So this brings up a whole list of concepts that I've been reviewing based on many, many years in the investment business. So one of the issues is that it's very hard to make statements that are contrary to what's right in front of you. And you really are relying on fundamentals to kind of figure that out. I believe probably the most stunning comment I saw post earnings, again, is from Daniel Ives at Wedbush. And his comment was that he couldn't believe what happened in Tesla's earnings. And I was like, and his follow on to that comment was that he had expected Tesla to have an excellent quarter and that he had previewed that. Now, I have to say I was stunned by his comment because Elon signaled that by reducing prices, they just had lower margins. So what I was surprised by, stunned by, couldn't figure out is if you've been cutting prices aggressively, the main reason you cut prices is, hey, stuff isn't selling at the current prices. Let's see if we lower prices and more sells. Could it be competition? Maybe not. There's a bunch of things that could be going on there. So the answer that I was looking for from the stock, from what was going to happen, was us dropping into the area of 190, 180, 190. And why did I choose that number? Because just go back for the last 3 quarters and the way the numbers have gone have been the same. So based on all of this, I'd have to say that my argument right now is we're in a reverse sine curve, meaning that, it's the real sine curve now, and a sine curve goes like that. Reverse sine curve obviously is the opposite of that. So why I wanted to bring this up is that it's really nice to be able to anticipate what's going to happen, facilitating your either acquisition or perhaps hedging or trimming your portfolio ahead of losing a whole bunch of money, which is one of the goals of our show, is you be able to anticipate what's going to occur. So one of the sidebar notes of this show that I'll bring up now, but you'll see me bringing up a lot as we go forward, is that there's a very strange thing happening, which is the example the Wedbush gentleman articulates it. Tesla and a lot of companies have behavior going on now that's surprising even the experts. So they were expecting one thing and another thing occurs. So there are several hedge funds that got wiped out by Tesla stock because when they're shorting it, it rises. And in some cases, when they're not shorting it, it falls. And so there's a lot of confusion with the professional community about what's going to occur. And so one of the sidebar notes I kind of tend to have in my show, which is something that I've been sort of studying for the last, let's say, 10 days, is uh, the middle-agedness of Tesla is what I'll call it. So what do I mean by middle-agedness? Well, there's something that just happened that nobody seems to be discussing, which is rebalancing. So each quarter, there's a rebalance that occurs. And what happens is that a company will be, their market cap, you look at it, and then there's a rebalancing that occurs by all the indices, particularly the ones attached to the S&P. But Elon and Tesla are involved in a lot of other indices. So what happens in a rebalancing? Well, if your market cap is dropped, it's actually possible the rebalancing will mean that others get more allocation, which you don't. For example, Microsoft stock price is up nicely. They're now a $3 trillion company. It's likely that there are investment dollars that will now move to Microsoft that used to be in Tesla. So hence, the next rebalancing, let's say it's a quarter away, could have an influence on Tesla stock price based on how that uh, rebalancing moves things. Well, the other question that naturally comes up is, well, what if the stock price has recovered by the time the rebalancing occurs? Exactly. Now you have the situation where, the rebalancing didn't hit as it would have. So the other note to make on the rebalancing is for the last, let's say, 20 years, I've been studying a company called, there's CalPERS and there's CalSTRS. So CalPERS is one of the largest retirement funds for employees for the state of California. So it's one of the largest funds in the world, above $1 trillion and continues to rise. And one of the things that goes on for them is that I have to admit, I don't know the exact number, but they have a large number of retirees, 1.5 million employees contributing to the retirement fund on a monthly basis. What happens with that cash is that all that cash comes in, and then they have a number of investment managers that they distribute that cash to. One of those ways that they work with investment managers is, for example, they have index funds that they invest in. So what you have is this fund probably represents 4% of the money in the world that comes in on a monthly basis. Well, we now have to multiply that by 100 times this amount of money to understand how much money is coming in on a monthly basis that's invested in the market. Well, what then happens? Well, they continue to invest until the rebalancing is done. And then they may change their investment process. But this is one of the most beautiful parts of being middle-aged or young, still growing, but not quite the middle age that Tesla's in the position of. So what I'm arguing is that one of the issues that's going on with Tesla is there's a wall of money out there. 70% of it is index focused. And as those indexes do their thing, you end up with a situation where the stock might be down, but because of its index positioning, it actually might rise because it's all supply and demand. The more demand there is for a stock, the higher the price it might go. So I feel like this establishes a basement for where Tesla goes, and you might see it start to accelerate and rise after a certain point. So the one other thing to note in this whole mix of what is Tesla stock doing, where does it head and why, is that there's a concept in investing called window dressing. What does that mean? It means that if you're an investment manager, you're being paid to manage money. Part of your job is to be able to anticipate. So there are many tricks that people use to get the win despite the stock that they bought losing. So, for example, if a company pays a dividend, they're sort of dividend capturing. So you can watch certain stocks like Microsoft. They'll tell you that we'll pay a dividend based on the the shareholders of record as of a certain date. So if you watch the stock price of those companies, there'll be a sudden pop up in the stock price with the goal being to capture the dividend. So for entities that, like retirees who want yield, they want to chase that dividend. They want to own the stocks of those companies that pay a nice dividend all the time. And so you might find managers that chase just that movement to capture that dividend on a regular basis. That's one of a whole bunch of tricks. Another one I want to discuss today is something called window dressing. So in the case of Tesla, let's say a company is long-term bullish, it's going to stick in there because it's part of the index, so it's not selling. But they have different money managers that have to show an impressive record in order to retain their investors. Well, what they can actually do is the day after they know the earnings are bad, sell the stock. And then you could look at their portfolio and see, oh, we didn't really get burnt that badly by Tesla because we had sold out of Tesla. And as you can see, we don't hold them as much right now. So there are certain folks who are on a smaller scale who have to do this. So the point, basically 250 to 190, let's say it's 20%. That's not the actual number, but it's a 20% dip. So what happens if you're managing a portfolio and one of your top 10 holdings at a 20% cut? Now you've got to answer to those large institutions that put money in and say, hey, this is what happened. We weren't that badly exposed, but we're fine, is one of the ways that this all works. So in general, what I want to share is that I think Tesla is doing fine. I think a lot of the fundamentals of what they're doing are awesome. And therefore, I think that it is a great long-term own. But I agree that it is a tough quarter because you're cutting prices and it's not clear how more often you're going to be doing that. Our margins are down from 21% now to 17%. So there are legitimate concerns there. The thing, though, is that, as I said in my last show, I really think that Tesla is in a very strong position to keep gaining market share and then all the ancillary benefits that go with that. For example, if you have more vehicles on the street and you have a large charging network, you eventually start getting some numbers that are generated by that service facility. You also have nice things happening. If other EV manufacturers have shut down their production, they have to pay Tesla fees based on those entities not meeting their sales goals. So there's a lot of sort of backdoor ways in which Tesla actually benefits from everything that we see going on. So I just wanted a sidebar note that everything you just heard took several hours of research to be able to present, and therefore I would like to ask other channels to not copy and present my material as theirs. You definitely could lose your channel that way. We don't want that to happen. So in general, what I want to say is that what I'm expecting right now is Tesla to be back above 200 into the 220s in the next 2 or 3 weeks. As I said last quarter, I believe the peak price point of Tesla over the next 90 days, which is this quarter, is going to be 45 days from now, or I guess it would be, let's say 40 days from now, because we seem to have gotten into this cycle up and down, and the nadir or lowest point is after earnings. The high point is midpoint between earnings announcement, which is what I'm expecting right now. I'd have to say that there's probably another show, but part of the reason I'm bullish on Tesla is that I have a long list of ways in which Elon is kind of ducking revenue. What's an example of ducking revenue? Well, Elon actually just came out and said, this was a month ago, that he'll now have 7 colored wraps that you can have for your vehicle. Well, that's great. And then there are limited locations that you can have those wraps done where you're allowed to basically change the color of your Tesla. Well, one of the examples I think of an oversight on revenue is that there are currently a limited number of factory colors. What if people that are very wealthy want unique colors that the factory doesn't offer? So now you have a new revenue source there. The second thing that I've noticed, and I talk with a lot of users, et cetera, is that I really think that there needs to be some kind of a revenue stream for Tesla associated with range management. So now that we're going to have all of these competing entities charging at Tesla facilities, one of the aspects of electric vehicles that I have not understood for a long time is I've surveyed maybe 100, 150 people who moved to Tesla are in other vehicles. And I was really amazed at the number of people I talked to who were like, look, I know where easy range management is for my vehicle. So I actually had a Nissan Leaf owner that had like let's say a 30-mile loop that they know they could drive in where they aren't going to have any charging issues. And one of the reasons he went to Tesla was he was sick of the loop that he knew he could do comfortably. And now he has the charging facilities and he has a couple of 100 miles of range on a Tesla. And just, it was a life-changing experience for ownership. So I believe one of the reasons right now a lot of people are not buying is EVs is very poor range management that's being done by a lot of folks. And I think that some changes regarding how this is done ends up being excellent revenue for Tesla, which also brings up the question mark of what's going to happen at a Tesla facilities if we sign up all the other manufacturers and a Tesla owner pulls up and there's now vehicles from every other make there and they can't get their car charged. I don't have an answer to that, but there's got to be some process for how we manage, who gets to charge when and why and what they pay for it and how that hits the company. But the point is that we have all these new revenue streams and better management processes, I think, that represent upside for Tesla going forward. So today's show, again, was really designed to sort of look at, well, what's the investment case for Tesla? I think that if you're a long-term owner and you've seen what's happened over the last year for Tesla's stock, it's embarrassing, but I really think this is a great time to buy Tesla's stock price all the way up into the mid 220s, maybe mid 230s. The one other problem that's going on for Tesla that I think is kind of fun, that's part of learning how to invest and trade better, is I want to call it the spillover effect. So one of the things that's a nightmare for investment managers is, let's say you have a stock like Apple, the company is doing well, same NVIDIA. Well, what'll happen is that everybody will buy up the stock above its value and its growth rate. So now you have this problem. There's a company, it's doing great. We've now bid the price up so high that the company can't meet the new threshold we've put it at. So as a result, it's like an overbuy of a certain group of stocks. Well, what do we do now? Well, we've got to go back and look at stocks that are core good stocks, but they're not doing as well. So the PE ratio of certain stocks becomes extremely high, and now that money has to go someplace, and what it'll do is deviate to companies whose PC ratio is slightly down for some reason, i.e. Tesla. So do not be surprised as we see certain powerful tech companies, stocks do great. And then when the next month of money comes in to those entities, they got to figure out what to do with it. Overpaying for PE, not a good idea. Underpaying for PE where Elon may have some issues, et cetera, but he's working it out, great idea. So this is what I'm expecting to occur on the stock side and why I wanted to do this show today. Any rate, I want to thank you again for taking time out to view our show. I next want to move on to our health tips. Now, I've done this before, but it's a big deal for me. I'm still working it out. I actually met a retired kidney doc who actually talked about the fact that we should be at 3 days of meat eating per week and the rest non-meat eating. What it does is gives your kidneys a break, and now there are other benefits in terms of non-production of ammonia or uric acid. There's all kinds of benefits going there. I've been experimenting and trying this out. I think I know dietary process better with meat in it, so it's been a bit of a struggle, but I'm definitely switching over diet. And I want to say that I'm impressed by the impact, even though those of my friends who know that I was giving them a hard time about vegan diets, you can bug me now because I have had to switch over and embrace that philosophy. Any rate, I want to thank you for joining us once again. This is Greg for Teslafaninsight. Tu savoir le hitarot hoda hata strasiche ni hao arrivederci, namaste. And in Jamaica, we say enough respect, walk good man. Thanks for joining us. Have a great day, and bye for now.